Global markets take a hit.
That should make notice.
Whoa, and oh, by the way, next Tuesday, that might affect the markets as well. We've got lots to talk about, so sit back, grab that cup of coffee, let's go. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links on today's video. Also, if you're new here, thanks for visiting. I am a practicing financial advisor, meaning what I discuss here, I do apply to our portfolios, our models, my personal models, etc. We also do other videos, educational videos. We do videos on tech, believe it or not, and like this, market updates twice a month. So if you find value, please do consider subscribing. Now, global markets take a hit. Yes, the Eurozone is actually getting hit worse than the US currently. Why? We discussed this last video because we have put out a lot more stimulus money. So markets are getting volatile right now. Next Tuesday, we have a big event which could also change things. So we've got a lot to talk about today. As always, we're going to start with the big charts, okay? We're going to look at our signals. What we see right now, as you can imagine, they don't look too good. We're also going to do sector spotlight. What keeps me up at night? Talk about those cycles. So let's get over to the big charts. Okay, as always in our video, we do start with the charts, but truth be told, this is the last step in my process when I'm making decisions. I always utilize the charts to confirm my decisions, and I'll show how well they've worked recently. So first up, I called this the most important chart of the year a few months ago. This is a trend line going back to 1981. Once again, you can see, right, fail, fail, and now another failure. So that is something we continue to watch and is interesting. Let's take a look here a little bit closer on the monthly chart. Going back to 10, here's our trend line here. Obviously, you can see we failed there. Down here is momentum. So at this point, momentum is still upside, turning down a little bit. So at this point, the long-term trend is still positive, okay? So next we'll transition to the weekly view, kind of our midterm view. Pretty obvious to see. This is 2018 trend line down here where we go. So you had a failure over here, had another failure right there, but here's the thing. We're going down the other direction. Week to date, we're down 4.5%. Futures are negative. Also, I talked about this, been waiting, and we did have it. So we've got a negative crossover on the weekly chart, which puts us in, a negative stance on the weekly view. And the last, of course, you're not going to be surprised at all. We talked about this. I said that overall we were neutral, but we had a negative bias, and we got confirmation with a lot of that. Obviously, we had a gap down here, right? You kind of look at some of this right now. It's going down. Today, we're going to be down again at the opening. We'll see what happens at the close, okay? What else do we see here? I think the biggest thing is what we talked about last time. Number one, look at volatility. We hit 39 the other day. Remember, I always say above 30 is uninvestable, okay? We also had a very clear negative crossover on the short-term chart. So you can really see that. What I'll do is I'll zoom in here on what's called the MAC histogram. So MAC, momentum, okay? That's the blue here. And I talked about this last time. We could really see it, right? It's going down, it's going down. And then, of course, we've gone negative on momentum. Now, you can see this happening, and that's exactly why we started raising cash again prior to the big turn. So looking where we are week to date, we've been able to eliminate upwards of 90% of the losses this week. So right now, our strategy, raising cash and some other non-correlated assets, we'll talk about that, has worked pretty well. Next up, the broad market, right? Everyone talks about the S&P, but the NYSE is truly the broad market. You see where we are here. We're now 13% down. Again, 10% would be considered a basically correction, okay? 20's a bear. So we are going in the wrong direction. It's broke to 50 right there. That's that line. Your next hope here is that it does not break the 200, okay? So that's called support. So we're going to continue to watch that. And we've had a big time negative crossover there as well. Now, the next thing is I've talked about the global markets, okay? Take a look here. Germany down 18%, Italy 31, France 27, Spain 37, Australia 16%. So again, we really front ran this with a $3 trillion stimulus package. Of course, we have slowed down because of it, but this shows the Eurozone, especially is getting hurt. And that's an issue around the world when you look at everything, okay? And this shows year to date, okay, all the different asset classes, what I'll call typical asset allocation. And you can see we've got a lot of ugly numbers. So this asset allocation has not worked well, 23, 12, 11. So some really bad numbers. You know, when I look here, small cap has been one of the most difficult this year. That is one of my short plays right now. We've been short the Russell 2000 for a couple weeks now. So the next big thing that's happened is treasuries. So this goes into the cycles, what I'll get into, but last time I talked about that I was fully invested into our treasuries, okay? Each time we peaked, it looked like right there we peaked when in fact we actually went a little bit higher, okay? We hit close to 0.9% there, 0.92 on the 10-year treasury. It almost looked like the trend was changing. It bounced off it. Now we're up against it today. I still feel that we go lower. Couple reasons. One, the economy's not too good. Two, when some type of stimulus comes, this will push down rates as we go forward. So next up, sector spotlight. I hope. Not a lot of energy this week. Sorry, folks. It's been a very long week. But we have talked about this for quite some time. Follow the dollar. Follow the markets, okay? We talk about cycle 4. We have been in cycle 3 where the dollar goes down. Now, last video I mentioned we're going between the two, and it's literally 50-50, could go either way today, okay? Meaning stay in cycle 3 or move to cycle 4 because we're going down since the last video, and now we've shot up. Now, we do think this is a little bit overbought. We'll see as we go forward, but continue to watch the dollar because it affects other asset classes like, number one, gold. Okay, as I mentioned, we trimmed our gold position here some time ago, down to about 3%, hasn't gone anywhere. It's holding a trend line right now. Let's see, we've got negative crossovers, but I do feel there's going to be an opportunity next week with some volatility after Tuesday, seeing the dollar go down, that I might add back to gold next week as we go forward. Now, I've had questions about silver. How come you haven't been in silver like you were in the past? So let me kind of go up here. So we had a great run in silver. We participated in that. 50-plus returns, 50-plus percentage returns. Then you see it breaking down, series of lower highs, okay? The number one reason that I decided to sell silver a couple weeks ago is the volatility. It doesn't have the same volatility like gold. So down here, this is something that I can put onto a chart, ROC, which is rate of change, okay? And I can put any number I want, 1, 2, 3, that represents percent. I put in 2%. Look at this volatility. I mean, you've got plus 8 day, minus 5, minus 10. That's just too much volatility right now for our portfolios. I don't think it's worth it. If the trend changes and goes up, maybe we'll look to add, but for right now, the volatility is not worth the return. The next thing I'm going to talk about is some of these sectors that do well, both in 3 and 4. And I'm only going to show one chart because they all look the same this week, which is the REITs, utilities, and consumer staples. They all have done very well. You can see that, right? We talked about this in last video, but they all have kind of broke down this week in what's been going on in the sell-off. This was a fairly broad sell-off. So a couple things here, right? When I look at this, you see the trend line. That's your 50-day moving average, 20-day moving average. But down here, clearly, we've had a negative crossover. So as we started breaking down here, I actually trimmed our positions. I was in a full position there. I cut those in half a couple days ago. Want to see what happens. Also wanted to raise some additional cash as we go into Tuesday and see what the outcome is there. So going to continue to watch that. Now, oil, always get questions about this, has been getting hammered. I almost pulled the trigger last Friday. I wish I did, where I shorted oil, but you can see not only is oil down, look at the volatility. Volatility on oil is up to 63. So I'm going to watch this. This might be a short that we add as we go forward. Again, watching the dollar, that's going to help us make that decision. Okay, last up. So we talked about a lot of things that we're looking at. We've been trimming, but what kind of opportunities are there on the sector side? So even though we're in stagflation, hovering between cycle 3 and cycle 4, there's other countries that are doing very well in growth mode, okay? One of those is China, which I've spoken about, okay? They are in cycle 2, which is growth mode, something we're projecting out in second quarter of next year. Not 100%, but we'll get there, hopefully. But when you look at China, this is one of 3 individual countries that I have that have done very well this week and have helped us. It's been choppy, okay? But when I do look at things, we came back up, we solidified. I am in a full position here right now. I do like that it's bounced off to 50 relative strength. So again, 3 different individual countries. I'm not in just the Eurozone. I'm not just in emerging markets. You have to be very specific right now on your toes in this environment. Next up, what keeps me up at night? All right, into the home stretch. We are digging deep today. It is early on Friday morning. Got a lot going on. Again, the cycles. Cycle 3, growth slows, inflation accelerates. We saw that again this week. Fed is neutral. I'd say handcuffed right now. And stagflation in the markets. We're seeing all of this right now. So again, we are still in cycle 3. We're kind of seeing different things here, whether or not we do go to cycle 4, but it's looking stronger. We stay in cycle 3 at this point. So what keeps me up at night? Let's take a look at earnings here, okay? This is the entire picture. This is through yesterday, 229 of 499 companies, minus 10% earnings growth. How about this one? Energy, minus 68. Now you know why that chart doesn't look too good, okay? So this is a big thing right now. Earnings is everything, okay? Yesterday we had all the big tech companies come out, and it wasn't good. Today, that's driving the market lower. One particular company, now you know compliance won't let me say that, but you know who I'm talking about. They've had 1% earnings growth in the last year. The stock is up 110%, okay? Think about that. There's a big disconnect. David Einhorn, big investor this week, talked about the tech bubble, okay? Now, here's the other thing. I've got a chart here with the S&P. Blue is GAAP earnings, generally accepted accounting principles. Real accounting, okay, not this funny stuff. You can see what's going on, right? Now, I started here in 2019. Keep in mind, we're coming off a 20% correction at that moment, right, at the end of the year, before the Fed stepped in at that point, okay? So you're at 32% on the S&P. Earnings, how about minus 25%? Hello, disconnect. That's the problem. When you buy companies, you buy based on future earnings. That's why this market, my opinion, is still very much overvalued, okay? The next big thing, of course, is unemployment. Now, yesterday, you heard about a better number. Indeed, right? 751 versus 791 the week before, but you have to add in the PUA. Those are people who are self-employed. Okay, so we still had 1 million people. Here we are months later, and we still have 1 million people a week. Keep in mind, California is 3 weeks behind on data. So we're not even seeing their data at this point, but we still have 22,654,000. Way less than a month ago at 25, but it's still 22 million people. Okay, that is a big problem. How big? 25% small businesses gone, just gone. Okay, that's an issue. And what has that led to? 8 million Americans have been added to poverty since May. This is the disconnect I talk about Wall Street and Main Street, okay? The next stimulus package has to go to the people, not to the big companies, to be determined. Now, yesterday, of course, everyone was like, oh, GDP was fantastic. Of course it was, right? When you look at what happened, we had a big shoot up, about 33%. They're looking at a 32% increase. Now, we went from shutdown, okay, but we have to keep in mind, we're still down, okay? We're still looking at a negative number in overall GDP. And I'm telling you, in the fourth quarter, obviously we see what's going on right now. You're going to see more shutdowns, and productivity is going to be a challenge in this quarter. Other areas we look for is ISM, okay? Been choppy, came down, came back up, but still not at the levels where we were, and coming down again. And the biggest thing, you go behind the scenes, new orders for ISM. Look at that. That is an ugly chart, right? Lower, 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 kind of came up. Now we've had 2 reads in a row where ISM new orders are down, okay? That does not project well going forward. So wrapping it up, here's a new chart from our partners here at Sentiment Trader. Bear market probability, okay? There should be there it is. Bear market probability, so it shows you where you are. You can see some peaks. What they've done is they've taken unemployment, ISM, yield curve, inflation rate, and PE ratios to take a look at when we're going to see a recession, or excuse me, a bear market. We are in a recession. And you can see it came down, of course, because all the money, and now we're going up again. Not saying it's happening. Believe me, I get this question asked a lot, but let's move on. So, what's next? Take profits, sell your dogs going into the end of the year. Good time to do some tax harvesting. Raise cash. As of yesterday, we're at 17% cash. Okay, we've gone between 20, 5, and now back to 17 in the last couple months, and it's worked out well. Follow the dollar, okay? The Fed. I don't see the Fed or stimulus, okay? I'm hearing maybe not till February, okay? Depending what happens on Tuesday, obviously more infighting. We may not see that for a while. Biggest thing, volatility index. We're at 37 closed yesterday. Expect that to go up today. The NASDAQ is at 40. Expect that to go up today with 4 of the FANGs being negative this morning. That's going to be an issue. And follow us for updates on social media platforms. Thank you so much for watching. Michael Loftus, Wealth and Wisdom TV.